Welcome to Explain the Charts. Today, November 14th, we're taking a look at EURUSD, one of the most traded currency pairs in the world. First, let's look at the current events and news. Google search results for EURUSD show that the market is under pressure, with the pair experiencing a fifth consecutive decline. A recent rate cut by the European Central Bank, ECB, offers little reason for near-term support for the euro. Economic data from the U.S., including strong housing and construction figures, has solidified investors' optimism and fueled a buying mood. The soft landing scenario appears to be taking shape with growth and activity metrics exceeding expectations in the U.S. This positive sentiment is further strengthened by upbeat retail sales figures. Overall, the news suggests a bearish bias for the EURUSD in the short term. Let's transition to the charts to see if the price action aligns with this sentiment. Switching to the daily chart, we can see that the EURUSD has been trading in a downtrend since the beginning of November. The pair has broken below the 1.0600 handle and is testing the 2023 low of 1.0448. This break of the 1.0600 handle signals a bearish continuation. The RSI is approaching oversold territory, which could indicate a potential bounce, but the trend remains bearish for now. Let's take a closer look at the 1-hour chart, zooming in on the past 24 hours. The 1-hour chart confirms the bearish sentiment, with a clear downtrend visible in the candlestick patterns. The pair has also broken through a key support level near 1.0550, which further reinforces the bearish bias. The 1-hour chart shows a few instances of bearish engulfing patterns, highlighting a strong selling pressure. On the 15-minute chart, we can see a recent rally, but the overall trend remains bearish. This rally could just be a short-term pullback before the bearish trend continues. While the RSI on the 15-minute chart has recently bounced, it's not yet showing signs of a significant reversal. In conclusion, the news and the chart analysis paint a bearish picture for the EURUSD. The pair has broken through key support levels and is showing signs of continued weakness. However, the RSI's oversold readings on the daily chart suggest that a short-term bounce is possible. This bounce, however, is unlikely to change the overall bearish trend. Key price levels to watch include the 1.0448 support and the 1.0550 resistance level. If the EURUSD breaks below the 1.0448 support level, it could signal a more pronounced decline toward the 1.0340 to 1.0406 zone. A break above the 1.0550 resistance level could indicate a potential short-term trend reversal. To confirm a bullish trend reversal, we would need to see a break above the 1.0600 handle. For the long term, the outlook remains uncertain. The upcoming week will see further Fed commentary, PPI, and retail sales data, which could impact the US dollar's strength and influence the EURUSD. The Friday close could provide potential guidance for the pair's direction in the short term. The euro would need to show steady signs of recovery to prevent a collapse below 1.0390 in the second half of the year. Remember, this is just an analysis based on the current information and chart patterns. Markets are constantly evolving, so stay vigilant, manage your risk effectively, and always consult with your financial advisor before making any trading decisions. We've seen the big picture. Now let's zoom in on the 1-hour chart, focusing on the past 24 hours. Now, let's take a look at the 15-minute chart, focusing on the recent rally.